QuickBooks Pro Desktop 2021. Record receipt of inventory with bill linked to PO or purchase order. In other words, we entered a purchase order in the past requesting inventory. We are imagining we are receiving it at this point in time. We will be populating the bill for the receipt with the PO or purchase order we entered in the past. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. We are in our Get Great Guitars homepage. We currently have the open windows open. You can open the open windows by going to the view dropdown and selecting the open windows list. In a prior presentation, we had entered the purchase order. We're now going to imagine that we are receiving the inventory from the purchase order. Now remember, the purchase order isn't actually recording anything as you enter the purchase order in terms of a financial transaction, no effect, in other words, on the balance sheet and income statement or profit and loss. It's just a request for the inventory. And that's different than what we might do if we were to purchase something. So you might be in a situation where you're purchasing something. If you make the payment at the point in time that you're requesting the purchase, you will have a financial transaction. If you are requesting a purchase with a purchase order and are not making any payment at that point in time, the purchase order will not have any financial transaction. That would only be a case if you have more power or in the purchasing side of things to make a request without payment, and then you would be receiving the inventory at a future point. So let's take a look at the purchase order we created last time. Just to review here, we're going to hit the back arrow. I'm going to open the purchase order, go back. This is the purchase order that we entered for our new vendor, that being Fender. So we have the purchase order, we have the information for it. We got 20 of these items, these guitars for us, which are going to be the Squire guitar. And we purchased them specifically for the customer, which has nothing to do with the vendor up here. But once we receive them, we would like to track the fact that this customer made the request for them, so that we can then turn around and make an invoice. So let's close this back out. Now we're going to imagine that we received the guitars, the 20 guitars. They're in our warehouse now, and they have a bill attached to them. They have a box of guitars with like a bill in there. And we're going to go, all right, now we're going to enter the bill, because now we have a financial transaction, even if we have not yet paid the bill, because now we have the inventory. The inventory is in our possession, and therefore we owe the money at this point in time. So we're going to say we received the inventory with a bill. So we'll say receive inventory with a bill. That basically opens simply a bill type of format. Now a bill type of format, you'll recall now here, is looking a lot like a check, but the fact that it says bill up here means that it's going to increase the accounts payable. So we're going to say this is going to increase the accounts payable, meaning we're going to owe this, we're going to pay it at some point in the future. We will populate this with our new vendor called Fender. We could do that with a drop down, or we could just type in Fender. It'll start to populate. We're going to say that's the one, and then I'm going to say tab. It says, hey, there's a purchase order linked to this. I'm paraphrasing. And so we're going to say, do you want us to check that out? And we're going to say, yes, check that out, please. And then this is the one. So there's the purchase order we made. So we want to use that to fill out our bill here. So I'm going to say, okay. And there we have it. So I'm going to change the date. I'm hitting the plus arrow, bringing that up to the 14th. And now it populated for us. Let's just tab through it. I'm not going to have a reference number. The amount was $3,360. That's being nice and populated from us from the purchase order. Obviously, once we have the inventory in our warehouse, we would count the guitars, for example. See, we had 20 on the purchase order, tie them out to the purchase order, and see that everything is working out the way it should. And then we have the bill due date. This is when we expect to pay the bill, which we're at a default of 30 days as our term. We might want to set the terms here. We might set standard 30 days as somewhat standard. If there's a discount area for a payment that would be sooner than that, we can put that in there. We might have a memo related to this item as well. Notice down here, just like on the check side of things, we have two tabs, one being the expenses, one being the items. If we were on the expense side, that would mean that we're choosing some account. We're just recording to an account. It may not be an expense. The term expense, let's just go over here, is a little bit deceiving, because you might be having something like fixed assets or something that's not an expense. But it really means that you don't have to worry about basically any kind of subsidiary account, and basically it's anything other than basically items. So the items over here means that we do have to worry about subsidiary ledgers related to the inventory that we now have on hand. So now this is going to be doing two things driven by the item that we have set up. It's going to be putting the inventory on the books, and it's also going to be tracking that inventory in terms of units. In other words, it puts it on the books in terms of our financial statements in dollars, which is the $3,360, also tracks in a subsidiary ledger the units that we have, the particular guitar, the Squires, and the number of them, the 20. So if we tab through this here, this is populated the number of guitars we have, the cost per unit, the total amount to then. Now we purchased it for a particular customer, which we don't need to be populating because we don't need this information on the bill. It doesn't have, in other words, it doesn't have anything to do with vendor, our vendor, Fender. It doesn't have anything to do with them. It has to do with us. We want to put this in place so that we can then tell ourselves, hey, look, we bought this specifically for the this customer, and then we can turn around and say, hey, we have the inventory now, and then link it to the sales side of things, which is going to be our invoice. So we will create an invoice for this customer. That's why this says billable here. When we create an invoice for new music stuff, that customer, it will then ask us, hey, do you want us to help you to populate this with the item that is linked to it due to the fact that you recorded it as billable? We're going to say yes, and we will then go through that process after that point. So what's this going to do? It's going to be increasing the accounts payable account. It's going to be increasing the inventory. It will also increase the sub account for inventory of the 20 units, and it will increase the sub account for accounts payable for the who we owe, ordering the accounts payable by who we owe, in this case the vendor Fender. All right, so let's go ahead and save and close this and then check that out. You've changed the terms. I'm going to say yes, I want to change the terms. We changed the terms there. I'm going to make that the standard. And then let's go to the reports drop down. Let's go to the company and financial. All we need is the balance sheet here, so let's just use that balance sheet. Changing the dates and the customize up top so we can get that range from 01/01/21 to 12/31/21, January through December 2021. Going into that item, we know that now we have the inventory. So inventory is going to be here. It's going up. So let's double click on that. There is our bill. So notice it says a bill here. That's what it is. So that's the term, the type of account, type of form. And then there is our bill. So closing that out, that looks good. Seems to do what we would expect. The other side is going to go into the payable. So that's a liability because we haven't yet paid it yet. We will be paying it in the future. Double clicking on that payable. There it is here. So if I double click on that bill once again, we see that there. Closing this back out. Closing this back out. Now the inventory is also going to have a sub-ledger account tracking the units of inventory because this is on the books for a dollar amount. So let's take a look at that by going to the reports drop down, going on down to the inventory, and we want to take a look at the inventory valuation summary, and I'll change the date to 12/31/21, and now we see that we have these Squire guitars down here that we now have on the books. The total cost, not the retail price, that's what we sell them for. They're on the books for the cost. $5,312. Back to the balance sheet. $5,312 ties out there. We also see the accounts payable showing that we owe people money. We also want to know who we owe the money to. For that, we need the sub account for it. So let's check that out. Let's take a look at it. Reports drop down. We want to go to the account, the payables, the vendors and payables, and we want to take a look at, I'm going to take a look at the vendor balance detail. Let's take a look at the vendor balance detail. And so here's our new vendor. Our new vendor, Fender, has that $3,360. That's the only person or company that we owe money to. So that's the total of $3,360 at this point. If we go back to the balance sheet, then of course that will tie out to what is on the balance sheet. Here's where we stand at this point in time. Here's going to be the balance sheet. There's been no effect on the income statement at this point because basically we recorded the inventory on the books as an asset instead of expensing it. Even when we pay for it, we're not going to expense it at that point. We're going to put it on the books as an asset and then expense it when we sell it in the format of cost of goods sold. So that's when we're going to expense the inventory at the point of the sale, doing our perpetual inventory process. Let's open up the trial balance just so you can take a look at that and compare your numbers there as well. Go into the accounting and taxes and trial balance, changing the dates up top from 01/01/21 to 12/31/21. And there's our trial balance you can also take a look at to check your work.